Hi there, I'm a forensic equity analyst from Optivest, and here at Optivest, our whole mission is to be a vigilant protector for retail shareholders right here in Sri Lanka. So today, we're going to put on our detective hats to investigate a really fascinating case on the Colombo Stock Exchange. And just so you know, everything we're about to discuss is built on publicly available data, current as of December 31st, 2025. All right, so here's our game plan. We'll start with the mystery itself, this unusual market premium. Then we'll go deep inside the company, examine its operations from the ground up, and then zoom out to look at the global landscape. And then we'll wrap it all up, deliver a verdict, and most importantly, give you the tools to do this kind of digging yourself.
So let's kick things off. We're not starting with the company, but with a puzzle, a real mystery that kind of goes against what you'd expect to see in the market.
And this really is the core question we need to ask. Why is one company trading so much higher than everything else around it? Is there something genuinely special going on here? Or is this just, a bubble waiting to pop?
Okay, take a look at this. The evidence is right here in black and white. The company's price-to-earnings ratio is a staggering 54.3. Meanwhile, the broader market average is just 12. Think about that. Investors are willing to pay more than 4 times the average price for every single rupee this company earns. That's a huge premium. Look, to make this super simple, let's think about a mango tree. A low PE is like paying a fair price for the mangoes you can see hanging on the branches right now. But a high PE, that's you paying a premium today because you believe this tree is going to produce a mountain of mangoes for years and years to come. So our job here is to figure out if the soil is actually fertile enough to justify that bet.
And that, right there, is the heart of the mystery. We're not talking about some hot new tech startup here. This is a mining company. That kind of valuation is, well, it's pretty unusual. And our job as forensic analysts is to dig in and see if the numbers really back it up. So, let's pull back the curtain. The company at the center of this whole puzzle is Bogala Graphite, which you'll see trading under the ticker BOGA.
Now, these guys aren't just digging random rocks out of the ground. Bogala operates in a really specialized niche market. They mine, process, and export this incredibly high-purity Sri Lankan vein graphite. And this stuff is critical for all sorts of things, from batteries and lubricants to industrial forging.
All right, let's get into the numbers. We're looking at their 2025 annual report, and right away you see something interesting, a contradiction really, that every investor should be looking at. And here's the big one. Their revenue actually went down by 6.6%. So how in the world did their profit then surge by over 71%? That just doesn't add up on the surface, does it? This is exactly the kind of thing that should make you, as a retail investor, stop and say, wait a minute, what's going on here?
Well, to find the answer, you've got to dig a little deeper into that report. Sure, they improved their gross margins a bit and kept a tight lid on costs, and that helped. But the crucial factor here, the real heavyweight, was a significant gain from foreign exchange. So let's be clear. This huge profit jump wasn't just because they were selling more graphite. It was heavily influenced by favorable currency rates.
And with all that profit, the company decided to be pretty generous with its shareholders. In 2025, they declared a really substantial dividend, a whopping 8 rupees per share.
But wait, that brings up another huge question. Think about this. The total dividend payout was more than 757 million rupees. But their profit for the year? Only 276 million. That's more than double. So, where did all that extra cash come from? And more importantly, is that sustainable?
The truth is, they funded this massive payout by dipping into their cash reserves, cash that they likely built up from a really fantastic high-profit year back in 2022. So this was a one-off event. It reflects past glory, for sure, but you absolutely cannot look at this and think it's a recurring trend. It's not a guarantee of what's to come.
Okay, we've looked at the money. Now let's move from the spreadsheets to the actual mine itself. What's happening underground, and what's going on in the boardroom?
This is actually pretty clever. It shows their made-to-order business model. They don't just dig stuff up and hope someone buys it. That second step, stoping, is key. It's all about planning the excavation. They actually select specific veins of graphite based on a customer's exact order. This makes the whole process way more efficient. Okay, now here's one of the biggest points in Bogala's favor. This thing is built to last. Their own reports estimate the mine has a life of 51 years. 51! For any investor thinking long-term, that's a huge piece of the puzzle and a big reason for its high valuation.
But just when you start to feel good about that long runway, The 2025 annual report throws a curveball, a huge one actually. A major uncertainty has popped up that puts a big question mark over the company's entire future.
And this isn't us speculating. This is a direct quote from their report. So what does this mean? The company's majority shareholder is being sold. A change in who's in charge is one of the most critical things an investor has to consider. It could mean a totally new strategy, different management. The whole direction of the company could change.
Okay, so let's zoom out for a second and look at the bigger picture. Bogala doesn't exist in a bubble. And the global story for graphite, well, it's pretty complicated.
First up, the tailwinds, the good news. The global push towards clean energy and electric vehicles is creating a massive tailwind. I mean, some research suggests demand for battery-grade graphite is going to grow fourfold by 2030. That's a powerful, powerful argument for growth.
But, and this is a big but, that very same research points to a major risk. The problem is, the graphite supply chain is super concentrated in just a few parts of the world, and that makes it really vulnerable to geopolitical drama. It's a huge reminder that just because demand is skyrocketing, it doesn't mean it's going to be a smooth ride to the top.
All right, we've gathered all the evidence, we've looked at the financials, we've looked at the mine itself, and we've looked at the global market. Now it's time to lay out the case so you can be the judge.
And here's the core dilemma. Lay it out plain and simple. On one hand, you have the bull case, strong global demand, a unique, high-purity product, and a mine that's going to be around for a long time. On the other hand, you have the bear case, profits that lean heavily on unpredictable currency gains, a huge question mark over who's going to own the company, and a risky global supply chain. We're not here to tell you which side is right. We're here to give you the facts, so you can weigh them and make your own informed decision.
Look, the whole point of this deep dive wasn't just to talk about one company. It's to give you a mental toolkit, a framework you can use for any investment you look at in the future.
So think of this as your forensic checklist. These are the exact questions you should be asking every single time. This is how you stop just reading headlines and start becoming a real financial detective, digging into the data for yourself. And you know what? In this day and age, you have some incredibly powerful tools at your fingertips. I'm talking about tools like large language models, AI. They can help you rip through an annual report in seconds. But, and this is important, they come with a huge warning label. You have to remember this golden rule. Use AI to assist you, not to decide for you. Think of it as a really smart, really fast research assistant, not your financial advisor. It can find the needle in the haystack for you, but it's your job to go back to the primary source, the actual annual report, and verify everything for yourself, always.
And of course, before we wrap up, we have to give you the standard disclaimer. This whole analysis is purely for educational purposes. We're using publicly available data to show you a process. Optivest doesn't have any skin in the game. We have no vested interest in any company we talk about.
So, we'll leave you with this one final thought. Is the premium on Bogala Graphite a sign of real, justified potential, or is it just market hype? The evidence is now in your hands. You have the tools to make that call. Here at Optivest, our entire mission is to empower Sri Lanka's retail investors. So if you found this useful, please share it with anyone else you think could benefit from this kind of forensic approach to investing.